All right, welcome everybody. It is our Monday, June 22nd, Time Savvy Trader session. What a week. Again, we're going to remember this throughout the session today. The dollar is stronger. That's a good sign, but it is not quite free yet. And I'll show you what I'm talking about. And gold, if you guys look at gold, gold is at that support level. So it is not confirmed yet either. So this means that most likely this is going to be a setup week that we could possibly find some opportunities in our swing trading, but really can't predict what's going to happen. So again, welcome everyone, and including those that are in the YouTube channel live right now. Before we get into any individual charts, I want to make sure that we slow down enough and kind of frame the week properly. This is one of those weeks where the market is not going to give us one clean, simple to read story, similar to what we talk about in our Hawkeye sessions with the day trading. It is going to give us several competing stories all at the same time, which it has been doing over the last few months. We obviously have the U.S. Iran still trying to move from a ceasefire and negotiation in something more durable. We will see how that goes. We have oil falling as the supply fears kind of ease back. But we also have that Strait of Hormuz still not fully back to normal. So we have the U.S. Federal Reserve holding rates steady for now, but they are sounding more hawkish than we anticipated. So that means they're expecting a rate hike. So in addition to that, we have Canada inflation running hotter on some headline numbers that they recently had. And we have gold pulling back into important support, as I mentioned before. Let's go ahead and look at a couple of things here in our session when it comes to news. Just a broad week ahead of us. And just as I mentioned, you can see some of the numbers for the CAD came in a bit stronger today. I did not trade today, but we do have the dollar. We'll look at the dollar here in a moment, pressing up into major decision areas. And we have some of our stocks, especially tech stocks, still looking very strong but stretched. Doesn't mean they can't continue, but profit taking probably is not far away. So tonight's message can be very simple. This is not a week to trade emotionally. You're going to need to plan. This is kind of a week to trade with some conditions that are going to be met. So that means what we're not saying is the dollar has to go higher. We're not saying that gold has to bounce. We're not saying any of that stuff or risk on guaranteed. We're not saying Iran is fixed or any of that stuff. So what we're simply saying is the market has reached a decision area, and our job is to be patient, let price confirm the next move before we commit to the capital on that. So that's kind of the time savvy mindset. We don't need more news or opinions. We just need better filters. So let's just talk about the US dollar overall and the US Iran relationship, because that's the key to all things that are happening. So last week, the market was trading a war premium type story. We were still in it. Oil was elevated. Gold had geopolitical support. Traders, it looks like the numbers, when I looked at the numbers this morning, traders were worried about shipping still through the Strait of Hormuz. So this week, the story's changed a little bit. We've had some temporary ease of those restrictions around the Iranian oil, and the tanker traffic is beginning to recover. It's not completely up yet, but it is beginning to cover. Yes, we will go over that as well. So thank you for the note in the chat box. Just know that the Strait of Hormuz, it matters when oil supply fears calm down. Inflation fears can calm down too with that, and that's kind of where we're at right now. But here is the part I do not want you to miss. A peace process is not the same thing as peace. And if you've been around long enough, you understand the peace process has never seemed to guarantee any sort of peace. So that is the phrase I would write down tonight, that a peace process is not the same thing as peace. A peace process can calm waters, and a peace process can lower oil. It can reduce some panic, but it can also reverse quickly if negotiations break down, as we're starting to kind of hear about already. So if shipping is threatened again, or if conflict spills back into Lebanon, Israel, or the Gulf, that's all going to possibly shift again. So we are not trading like the world is fixed, because it's not. We're going to be trading like the market has received some relief. but still needs confirmation. What does that mean? We're still not looking for that 2, 3 week, 4 week trend. We're looking for a 2 day maybe, and hopefully have a plan in place for that. So, and that really matters for currency traders, especially when oil fails. We've mentioned this before, and that inflation pressure can when the oil actually not fail but falls, when the numbers come down and inflation pressure can ease a bit, that does a lot for our currency market. Central banks may not need to be quite as aggressive. But here's the thing: if inflation stays sticky in any way, or if the central banks stay hawkish like the U.S. Feds are, then the dollar can still strengthen even with the oil falling in price. So that is exactly where we really are tonight. The Federal Reserve held rates steady last week, but the tone was not soft. So the Fed is now clearly more concerned about inflation than the market really wanted it to be. Nearly half of all policymakers now see at least one rate hike. I wrote that down this morning. They see at least one rate hike this year, and then several more than one. Some of them see more than one this year. That is a major shift. So, a few months ago, we were still talking about rate cuts, and now we're talking about possible hikes. And that alone changes the currency board across. So, when we look at the dollar tonight, keep that in mind. We have to respect what we're seeing. And I'm going to show you a 3 day chart and things like that. So, we will talk about the dollar. I wrote some things down. Let's look at our news items, just kind of give a scope of what we have. We got some news coming out tonight. Remember, there is a video on our YouTube channel. Those who are watching by YouTube, after the session's over, go down to our general video line, and you will see a video called Market News 101, something to that effect. And it explains the major ones and what they involve, the buckets, the 5 buckets that they involve. And when you understand that, it makes a whole lot of sense. And we teach in that video, you pay attention to what's previous, you pay attention to what's forecasted, and then you analyze what actually happened. And these little differences change. It doesn't mean it guarantees up or down, but this is what moves the market, these little changes, because it's unexpected. Okay, so tonight we do have some news coming in for the Aussie dollar. Nothing red folder like. Consumer confidence did kind of stay where they expected it to stay for the euro. Um, Going into tomorrow, we really don't have a whole lot of red, but we have these orange, and we talked about these things in that video flash. Again, look at what's previous, what's expected, and then see what happens. Again, with swing trading, we are not near as concerned with the orange as we are red, but anytime we have somebody speaking, the Bank of Canada speaking, we got to be listening at this point for any, especially for any long-term trend that we're trying to capture. Bank of Japan summary opinions. Yeah, it's not red, but we kind of want to be aware of what it says. We just click on it when it happens. So again, CPI came in for us last week. The Aussie's coming in tomorrow night. And then we got Wednesday, pretty clear overall Wednesday, nothing crazy. We do have some people speaking, but nothing red folder, nothing that's not expected. And then we have that evening, the Aussie coming up with their unemployment rate. And it looks like they went from 4.5 to 4.4. If that's a good trend for them, we'll see how that holds. Going into Thursday, we have some U.S. numbers finally, the final GDP quarter to quarter, because that comes close of June. Quarter to quarter. So they're going to be 1.6 was what's previous. 1.6 is forecasted. We need to hold on to that 1.6 or go higher to have any sort of economic support that's happening. So not a whole lot of changes here. And then we end Friday very, very quietly, except for the slide that's little FOMC talking going on. We want to be aware of that. And I do, as we go into that last week and going into the July 4th, we do need to look ahead because this will kind of give us an idea of how long we can hold our trades and our swing trades. Nothing really going on Monday. Pretty much light. Let me see what we got here. Got trying to get in. Let me see. Gotcha here. I see that. Sorry about that. You will be popping in here shortly. I just now saw the alert. My bad. Thank you for the notice on Telegram, though. We've got nothing sitting here in on Monday. Tuesday, as we start ending our month, we see a few red folders. Again, most of our heavyweight was last week. So we do have the JOLTS job. We talked about what JOLTS was. And then we go into July, a new quarter, It's the second half of the year. It's truly in the summer. We've got a Canadian holiday on July 1st, and we're prepping up for the 250 for the United States. So you can start seeing we're still going to have some news coming out, but we're going to be really, really loose. Bank holiday on the Friday the 3rd. So next week is going to be a little bit lighter. So if we get in a good trend this week, it could really pay off for us. So let's dive in. And before we dive into the charts, I'm going to be very, very cautious of our time here. I'm going to change this over to the dollar. I want to show you guys a couple things because we are looking at. Now, when we look at a chart like this, it's very, very clear to see. This is our 4 hour. I would never trade this on a 4 hour chart right now because things are moving so crazy. I would jump up to your 3 day and look what you're seeing, and you can understand why there's a hesitation of going long with the U.S. dollar. So on our 3 day chart, it's worked its way all the way up from the lower demand, all the way from this area. Now we have other demand that was created, but this lower demand, it worked its way all the way up, and we can squish and squash and look back even. And we can see here's the demand that we're talking about. That move right there is a baseline move. That move right there started that whole move, and we've been waiting to get back to it. We did, and we moved up. Look what we created. So we have to be aware of that. So we can see the lower demand area and now pressing into that lower edge of the major overhead supply. And when we jump back down to the daily, we still have some room. And this is how we need to be looking at. We can obviously see the clear recovery happening right here. Our most recent zones were our demand. We're seeing this recovery. Sideways, very, very easy to see. I would say we're sideways now, not even with a down bias. I think we're sideways with a potential up bias. So price has been making those higher lows and pushing off that support, and it's now testing the 101 area, which very, very important mindset. So here's the key. Here's my read on this. The dollar is not fully broken anymore, but it's definitely not fully free of some headaches. So, and that's an important distinction we need to be making. The dollar is stronger than it has been for a few weeks ago, than it was a few weeks ago. It's showing some strength. It has momentum. It has a hawkish Fed behind it. So remember, if we raise rates, the dollar is going to come up a little bit. So it has geopolitical uncertainty that can still create that safe haven demand. So we got a little bit of risk. Remember, United States dollar is a safe haven currency. So but price is also pushing up against that resistance area. And this area is really, really small right now. Okay. But it's really this whole line where we currently are up at to all the way up here. So this is where traders can get trapped. So we would be very careful not to get trapped. They see the dollar running and they want to buy it right now, or they see resistance and they want to short it right now. And we want to do neither of those. We want to watch decision zones. If the dollar can hold above that 100 area and push through this supply zone with some strength, then we'll have some room. Then dollar long steps become more attractive. They'll have those pullbacks. And where would I be looking for a pullback? If I was drawing a horizontal line here, I would go right there. That's where I'd want a little bit further up, then come back down to, because there's nothing here that says this is a breakout, not on a long-term trade. And so we just play that route like that. So we'll see. And that pressure right here could also affect the Euro US, the Pound US, the Aussie US, any of those US currencies that the US dollar is the backside. And gold, don't forget gold. It could also support the US yen and the US CAD. So if the Dixie starts rejecting the zone, starts falling back under that support, then we need to got to be open to the anti-dollar bounces again, and that again, that could actually help the euro recover, help the pound US stabilize a bit more, give that Aussie US a lift, and allow gold to breathe as well. So there's not a whole lot here, guys. The Dixie is the first screen we should look at, though, but not because we are trading it directly, but because it tells us what the weather is, just like we talk about in the morning sessions. If the dollar is our weather, then we need to be prepared for with an umbrella just in case. Then every U.S. pair that we look at is just choosing whether to walk outside with an umbrella or without an umbrella. So let's switch on over to gold. A little bit weird with this one. This is fun. Look at that support. This has been fantastic. Now, if you guys are keeping up with some of the things I'm working on, you've been hearing about Legacy Compass. Legacy Compass works on the 3 day and the day charts, and we would have been accumulating. And Legacy Compass is an accumulation meter for me. Trading, I love to trade, but trading's hard. Trading takes consistency to be profitable. Wealth accumulation, is a whole lot different. And what I'm looking for are opportunities to really load up before we see this kind of move and add to my position on a daily, weekly, bi-weekly, monthly, whatever that is, each time a dollar cost average on the way up. And had we done that, we would have taken it from last, call it, that would be 3 years ago. We could have rid this thing up and then we could see that it's turning over and it would tell us to it, depending on what kind of account you have. If you are in a taxable account, do nothing. But if you're in an IRA or a protected tax account, you sell it and wait for the accumulation time again. But if you're in an open account, you definitely don't want to be selling things because you're gonna have a heck of a tax consequence there. So let's talk about gold. Gold is very important tonight because gold has been one of the cleanest emotional, our cleanest, clearest and cleanest emotional, what we call it, gauges, I would say, in our market for currencies. Earlier, gold had that geopolitical support. Then, as that oil cooled and the dollar kind of strengthened, gold started to lose its momentum. You can see this is just amazing. Then it's kind of been petering off the last few times. And on the day, let's go back to the 3 day one, just so you can see what I'm talking. Gold is still in a much larger long-term uptrend. Okay. But the current swing is extremely corrective, which is a lot of fun to watch. And if you haven't gotten to gold, this may be one of those accumulation points because we'll see. I have this feeling that we're going to see a market correction that's quite large in the near future. We'll see. But the numbers are saying it is so. But price has pulled down hard from those highs, and it's now sitting in that broader support area around that 4,200 zone. So that zone, by the way, does matter. This is where longer term buyers may start paying attention again and buying them up. But we have to be careful. A support zone is not automatically going to be a buy signal. Support just means we should watch it. We still have to have confirmation. And when we get the confirmation, then we can act. So now, right now, gold is just trying to defend an important area, but the bounce has not fully proven itself yet. If the Dixie, the dollar, continues higher and the yields still remain firm, gold can actually stay under pressure. So it could stay right here and just go sideways on us. However, if the dollar happens to rejects and inflation or geopolitical fear come back on the creeps back in again, then our gold can bounce back up sharply again. So again, we're not making predictions, and I'm not a financial advisor. I'm just telling you what I'm seeing and what my gut tells me through experience. I would not short gold into major support regardless without some sort of real confirmation. And at the same time, for trading, not investing, but for trading, I don't want to buy gold just because it touched support. So that is the grown-up answer. We need to see whether gold actually builds a higher low, reclaims its short-term structure because it's kind of gone right now. And then we see if it starts attacking that overhead resistance. Until then, gold is kind of really on our watch list candidate, not really an automatic trade. So I do want to look at the triple Qs. I don't normally do this, but you can see a lot of value. And I've been watching these because of wealth accumulation, the legacy compass, and things like that. But it does affect our swing. My legacy compass told me on this to buy here, obviously. It told me to buy discounted here. It told me to buy discounted here. And it added along the position. It told me to accumulate here and it told me to accumulate here when everybody else was panic selling. And that's the difference between a wealth accumulation and trading. This is also a 3 day chart, by the way. Um, but what do we see? I mean, let's just talk. The triple Qs are strong. There's no question about it. It's clearly a powerful, powerful uptrend. We do have some pullbacks. Let's jump on that daily chart, show it again. Goodness gracious. It just we do have a little supply that we're sitting up here, but that I just don't think that's going to last. The daily chart just shows price near that high after a major advance. This is not a weak market. Our tech stocks have been carrying a lot of confidence. That's the AIs, even the stuff that goes into our technology for SpaceX and things like that. The momentum has been really strong. But here is the ruthless part. Strong and safe are not the same thing. So, while the QQQ or triple Qs can be bullish, it still can be extended. I'm almost thinking this is an extended market. I think we need to be pulling back into the 600 range. That's just my opinion. Again, that doesn't mean it can't blast up through to the 750 and going on higher up. So for our longer term traders, the longer ones, you definitely want to respect this uptrend. But for swing trade entries, the location does matter, and it's not in a really great spot for that. So I don't want to be the trader who finally gets excited after the easiest part, the move has already moved away. That's what most novices will do. They don't want to miss out. So on the triple Qs, the question really is not whether it's bullish or not. We already can tell that. We know it is. It's really is it in a good location for a new entry? And it's not. And we can see that just by the zones here when we pull those up and how tight they are. So it's not in a great spot. Down here, maybe, absolutely, but not right now. So let's go to our currency board since that's what we all trade in here. But a pair is a pair is a pair. I'm going to step right on into the Euro US, the most traded pair we've got. And I just minimized that. That's fantastic. Let's put this to the USDN so I can see what's happening there too. Go right into here, blow this one up so we can see what we've got. And you should quickly see on a daily chart, it is a mess and it is sideways and it's at a support area. It looks like a mess on a 3-day chart. We're at a critical support area, I should say. We go to the daily, it's a critical support area and it's pointing down. We go to our 4 hour and now we've got the picture we want. There is nothing right here that says we want to jump in. We did have a sell order. We did take that sell order last week, but because of all the chaos in the world, I closed the position off on Friday before the market shut down, before any news, and we took our small amount of profit. So the Euro US is sitting around that 114.20 area. And it's trying to stabilize after all that selling pressure. I just don't know if I think it's going to break down personally, just me. Um, on the daily chart, let's look at that real quick again. Again, we're going to really break down some of these pairs more than we normally do because I think it's a great lesson. Um, you can see how prices bounced from the lower floor area before, but it did make a new high. So to me, this is a nice wedge pattern that has a trend on the way down, but it's still below overhead supply. So it tells me the euro is trying to recover, but it has not fully reclaimed its control. And the European story is really mixed. We have those ECB speakers coming up. We talked about the speakers. We have European PMIs. We have, if I recall correctly, German data coming out, and that's part of the euro. The inflation expectations are still lingering in the background for them. So right now, the euro US is mostly about the dollar. So if the dollar continues to remain strong, we would anticipate this continuing to go down. So if the dollar breaks higher, the euro is probably going to struggle. If it rejects, the dollar rejects and gets weaker, then we have room to breathe to the upside. I'm just not so sure I'm clear on trading this on the upside right now. So for the euro US, I would not chase the bounce. I want either a clean reclaim of the structure or a pullback. I would want to get in where that major ceiling's at right now. We haven't had a break move, plus we don't have much room. Even with our Hawkeye trading, we always say we have to have room, at least 10 pips of room. On our swing trading, we need to have at least 30, and we don't. We're in the middle of a demand. So we would rather have it pull back into this area to give us the 30. I would say probably around the 1580 mark, and that gives us 150 pips. So we've got time on this one. We could get a little bit more aggressive, and I like this move. Yes, my YouTube friend. Yeah, that's exactly where I was getting ready to say. Where this was once support, this floor, this major floor, is also now going to become resistance, and that's 88 pips away. So I would put a happy face. You notice the wick over wick, that on a lower time frame would be a supply zone, which is what we're seeing right there. But we don't go down too much. It's going to be this whole little wick over wick. Wow, that looked weird. That's on the daily. Go back on the daily. There we go. So I'm looking to put a happy face right about here and be right there's my not quite so big. Not that happy about it. I'll put that right there. That would be my earliest entry and drop that down to the 4. You can see where my happy face is. It's right there. And that's a great zone. You'd have your stop above there. And you would have room to the downside. Now, understand, this demand zone is almost gone. Okay. So we can play as if all, since it's lingered here, most of the buy orders have been trickled away. The only ones that left are ones that are down here. So we have some room to it. So you would so on this swing trade, if it comes back here, I would risk about 31 to go 70-ish with a half, take a quarter profit off when you get to about the 40 mark. That's what I would be doing. Yeah, exactly. Exactly. Let's jump into the pound US. It's going to be very similar. That's why I want to hit it the same. Kind of the same overall look. Incredible sell opportunity we had on Thursday, I believe it was. Great trades throughout that day on a Hawkeye. We haven't really had a signal on trend except back here and here. So we could have made our zone here. I haven't looked at the alerts, but we definitely cannot go short right yet. Not on this, not for swing trading. This could be a great move on Hawkeye, but not for swing trading. Again, we're just respecting our nice Sherlock zone, and now you guys can start seeing the power of Sherlock and knowing kind of what's coming. This would be an opportunity potentially where it's at right now to, yeah, you could potentially do a day trade if you're doing the Asian session. This might be a good place to, depending on what Hercules is saying. And I don't carry Hercules on swing trades for the right now. Let's see what else we got on the pound US again. So again, I want to be very careful with the pound US. It may be tradable, but it's not clean enough yet to force it. So if the dollar continues to strengthen again, the pound US could continue lower down. But if the dollar happens to reject and starts bouncing, getting weaker, then the pound US can bounce. So we want to be very, very careful with that. Going quickly into our US yen, our next most tradable one, in my opinion. We've got some fantastic opportunities, buying opportunities in here that we had. This is on the daily. Look at it on the 3. We're sitting in a supply, but we broke that major weekly and monthly. So again, we are in limbo. This is going to be tied directly to the Dixie, but we are in a very critical place. If it breaks, man, it's going to be fantastic. Notice our buy signal here on the 3-day would have worked out really, really well. Go down to our daily. We have the sell would definitely have been bad, but you would be selling into an uptrend. So hopefully you weren't just taking it randomly. This buy would still be probably active, to be honest. Your stop would have been down here, so you wouldn't have been stopped out there unless you had some other trade rules. But looking at the US yen, one of the most important charts really on the board tonight, it's sitting around that 160, 150 area, a very, very key number. And it's extremely elevated. What I mean by that is it's right up against some major resistance. This move right here, look at that 4-day move. Yeah, okay, Sherlock's not there, but you got to respect that move. And that's where we're at right now. Looking at the 3-day, that's the same area. Drop, it's a pivot base drop. That's the same area we're sitting right at. And yes, we've broken the technical number of our ceiling, but that doesn't mean that area, that zone is quite clear. So the Bank of Japan raised its rates to 1%, but the yen still did not get the kind of strength many traders had expected, to be honest. And you might be asking, if they raised their rates, why didn't it get it? And the reason was because the U.S. side of the equation is still extremely powerful. The U.S. rates are higher. The Fed, we came out last week, is a whole lot more hawkish than we anticipated. Hawkish. What does hawkish mean? Hawkish just means that the feds are looking to raise interest rates at some point. Dovish is the other one, and we talk about that in that video about the news. So yeah, hawkish. Hawkish, hawkish, like the bird. Hawkish, dovish. hawk and dove. Um, and the dollar keeps pressing higher. So here's your warning with the US yen. It may be bullish, but it is dangerous right now. So when price gets this high, intervention risk kind of creeps in and it gets real. Japan does not like disorderly yen weakness. They don't want the yen to be weak. And even if there's no real intervention plan, this pair can snap back really, really hard when position gets real crowded. So if someone is long the US yen right now, they just need to be managing it very carefully with the plan. Okay. That's simply, if you don't have a plan, then you're gambling. If someone is looking for a fresh entry, they need to be extremely selective to this. And I definitely don't want to be late. And I definitely don't want to emotionally chase it, even though my gut is saying go. I want to feel like I want to go. So let's talk a few crosses before. What's our time? Our time's good. And definitely put your questions, continue putting your questions in the chat. It's fine. Let's look at our pound yen. Our pound yen's a little bit different because we did take a position on this last week. You can see we got our fast sell. A lot of our traders aren't taking the fast sell right now because the markets are kind of messed up. And that's a wise move. This is a demo account. I love to track it. I like to take every signal on my demo, as many as I can, so I can use it to evaluate in our tracking system to get us to figure out how we can make Tide Fusion even more efficient, especially in a crazy market. What I like about it is our stop, not in a great spot when we got in. It wasn't a great spot, but we followed our 1%. We have come up into this even today, and then we hit something. What did we hit? We hit our Sherlock zone, this little wick over wick, and it just fell. Now, that does not mean it's going to stay there. Okay, so just be very, very careful. Um, Goodness, pound yen, euro yen, Aussie yen, these pairs are going to be attractive because they are going to move, but they're also the dangerous ones because they're going to move. So it's a catch 22. The pound yen is around the 214 mark, and it has been extremely volatile. The euro yen is around the 184.60. I think I remember it. It has pulled back into a structure, and the Aussie yen's at 113, if I 112, 113, and it's pressing near overhead resistance. So definitely common theme is the yen weakness is still the major force, but these pairs are not low risk. So remember, any of these pound yen, euro yen, Aussie yen, you're talking a little bit higher risk. And if yen sentiment shifts, they can reverse real fast. So I'm hoping we create a drop-based drop here and create a Sherlock zone here so I can slightly save some money per my plan. I don't think we're going to do it. And here's why. We had this drop into this zone. It moved. It came back, moved out, created a Sherlock supporting, created a new pivot low, and moved out. And we're just having some candle fights. I think we could come right back down here and go right past. We'll see. Can't predict it. This one's a crazy one to be in. It's not my favorite. I don't trade it live very often. The structure has to be much cleaner than this for me to get in it. But it's on demo. It is what it is. So I would definitely give you guys a little heads up. Not again, it's not going to affect your day trading. Don't let it affect you. Have a broad scope understanding of what's happening in the global macro market, but don't let it affect your day trading if you are day trading, because that's a totally different bird. So we can watch them, the pound yen, the Aussie yen, the euro yen, and we can analyze them. We can trade them if the setup is clean, but we definitely don't want to be married to them because they can give you a widow heartbreak. So here we go. We're going to go over to our Aussie, and you can see we're up in that mess. What a mess right there. What a mess right here. We're all kind of looking the same thing. The best looking one is the pound yen still, but we'll see how it holds true overnight. So Aussie US, I want to look at. And again, hopefully you guys can see this very clearly on a 4 hour. I'm going to flip to the daily. And hopefully you can see what we're doing here. Trend is our friend till the bend in the end. And we've had this little bend happening. Then we drop down to our 4 hour market, look at it, and we can quickly, let's go to 3 just out of curiosity. Yeah, we're just reacting to it. We have this big, huge reaction, major areas, new Sherlock created on a 3 day supply. The ribbon is turned red up here on a 3 day. Our dotted line hasn't turned. It's going to take a little bit for that, but our first indication of a possible trend change is actually happening right now. And so we look at it. And again, it's not pretty. It's not something I'm going to jump in on. Why? Because I'm sitting near a major weekly floor, a brand new fresh demand on top of demand on top of demand. Yeah, we have some short. So what would I could I do? Well, you got an aggressive entry here and a nice entry right here. If you're conservative, if you're conservative, this is where I would go. Right there. Great spot. Plenty of room to the downside. Right now you have no room, so you can't trade it. There's just no room. No room in the end. So we just let that one go. And so again, the Aussie sitting around the 7,000. That's very interesting. It's a very interesting place considering the central banks are telling us something different. And interesting that this week also because the Australia actually, I believe it's this week, CPI numbers, I thought we said. I thought this was okay. This is last week or next week. Let's go to back. I think it's this week. Yeah, right here. Tomorrow night. I thought I saw CPI numbers. I'm trying to do too much by memory, my bad. But yeah, we have CPI numbers coming out and employment data on the calendar. So the RBA, you're going to hear RBA, that's the Royal Bank, I think it is, or Republic Bank of Australia. I can't remember what R is. I think it's Royal Bank. They're in a difficult spot, guys. Inflation is very, very sticky. Growth and labor conditions matter to them as well. On the 4 hour chart, the Aussie US is kind of recovering from a lower area, but it's pressing up into that supply. It's just not pretty at all. So Aussie US a very, very conditional setup. Let's look at the US CAD. Anybody have questions? I'll make sure I don't miss any chats on either channel. Make sure everybody's good over there with let me flip over here to the other one too, just to make sure you guys are good over there. Nope, that's my legacy compass data. Where did I put? Right there is where I want it. Yeah, we're good. We're good. Okay, got good amount of people watching. Good. No questions over there, so let's get right back to our work. US CAD. Let's look at the 3 day. Again, this is pretty. This is fantastic. Now, we had this demand zone. We had a buy signal on the 3 day. If you're trading Tide Fusion on a higher time frame, you'd got in this candle and you've been making profit at this point. Right? Obviously, remember, we talk about this. Higher the time frame, the more reliable signals are always going to be. So it doesn't matter what trading system you're using. A fantastic breakout move. You can see the breakout was on here. We've got now support of the weekly ceiling. We've got the major floor. We've got the major ceiling for the monthly, all broken. The major monthly floor is down here. It most likely is going to move up. We have a green color change of our ribbon, green dot color change as well. Uh, the dots are flat, a little bit flat for me, but that just tells me we may be running out of a little room. But look at this on the daily. Had you seen this, now, again, hindsight's 2020, but if had I seen this, we're above both of the ribbon and the dotted. We have a green, the red's flattening out. I think I might have taken that next one. Had I done that, that would have been again, 2020 again, guys. But I know myself, had I taken and paid attention, if that was the right time, obviously I would not have ridden it up 371 pips in a week and a half. That is all oil driven. That is all of that. Now we are a little bit extended now, so it is one of the most cleanest macro looking pairs currently that we have because Canada's just had a very, very hot headline CPI number come out. Normally, stronger inflation can support CAD because it reduced the odds of rate cuts. But oil is falling, strangely enough, and Canada is tied to oil. So that complicates that story, and that U.S. dollar strength. That's that Canadian dollar being tied to oil. So on our 4 hour chart. Price is still trending higher and is sitting near that 1.4160 area. Yeah, 4160 area. That tells us the US dollar side is still very strong. But with Canadian CPI hotter, I do not want to just blindly chase this thing. I want to go without a good pullback. And it's kind of trying to do that, but we're a long ways away from this. So what am I looking at? I'm looking at a rally-based rally here. That would be my aggressive entry at the 4100. That's a nice number. But if I was really being honest, this is my better trade down here where the ceiling is. Strong pullback. If you look at it, we haven't really had that big of one since May. So it's been a while since we've had one of these big moves like that. But then we were also in a downtrend. So crazy, crazy stuff. So don't want to chase it. We've done what we needed to do. This is definitely not a set and forget kind of week. We want to be very, very careful. Um, Preparation is definitely better than prediction for this week. So I made some notes for myself. The dollar is a decision. We talked about that. Gold is in a larger uptrend, but it's pulled back. Triple Q is strong. My goodness, they're strong. US yen has some strong momentum as well, but we're at a really very, very pivotal spot and very, very crowded spot. So we want to be very, very careful. So again, just before we close off tonight, we're not trying to be early to everything. We're just trying to be prepared for the possible cleanest thing that we can find. Again, if you have any questions, definitely let us know. We'll be running the Hawkeye session, I believe it's 6 my time in the morning, and I will be leading it by myself tomorrow and Wednesday, I believe, and maybe even Thursday. Deb's out, and our traveler is still over on the other side of the world doing what he does and what we all enjoy doing when we have a break from trading and investing. So I would continue to ask for your prayers for wisdom on the legacy compass thing. That is a huge, huge endeavor that I'm trying to get solved for the benefit of the community. It is a doozy. I thought Tide Fusion was a doozy, but there's a lot more details into this one. So prayer for wisdom. And if you guys have any questions, just send them in